the most important thing people can do is own physical metals. I don't think there's enough physical to cover the amount of paper that's been put out there. I think there's been more notes put out there than there's actually physical supply of the metal. So if everybody wanted to cash in and get physical all at one time, there isn't enough. So you'd have a lot of worthless paper that would not help you if you really needed it.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Todd Bubba Horwitz from Bubba Trading. Todd, thank you so much for joining us today.
Elijah, great to be back with you again. It's been a while and it's great to be back.
We had you on last summer and you were saying that we were heading into, Jimmy Carter era stagflation. And it seems like what we're seeing even the Fed step in and tighten a bit. Do you think that will prevent the stagflation that you've been calling for?
No, I don't think so, Elijah. I think we've gone to, first of all, the Fed is about 10 years behind the curve. Although they insist that they're with the curve, they are so far behind it that it's kind of sad that we actually buy into their ridiculous crap. And this administration is about as bad as it gets for capitalism and for markets and for an economy, because they don't care about what they spend. They only care about, their ridiculous agendas, which, you have to always ask yourself, Elijah, at what cost am I going to create this green energy if that's going to be the case? I mean, first of all, they're 40 years away from completing that project anyways. And yet today you're torturing middle-class America and basically destroying them with the cost of gas, food. And of course, we had a CPI number, which was 8.5%, but you can take that and multiply it by 3. You've heard the rule of 3. This is by the rule of 3. You can multiply that because inflation is much higher than 8.5%, but they tend to leave out food and energy, which for most Americans is their biggest cost.
Now, you're saying that really the current administration is at fault for a lot of the inflation we're seeing. It's being blamed a lot on this Ukraine-Russia war, especially if we look at the rise in oil prices. What do you think is the actual cause of the inflation and the rise in the general cost of living that we've been seeing and the dramatic effects we've been seeing at the pump?
Well, I mean, I think, first of all, they can stick it where the sun doesn't shine when you talk about who they want to blame. They can blame Putin and Russia all they want. However, the day after the election in 2020, I said that oil was going to $100 a barrel. Okay. Oil was at 90 before this whole conflict started. Okay. And we got back to 90 the other day. So the reason that we're having this ridiculous inflation is because I didn't decide, they decided to put China and Saudi Arabia and Russia back in charge. And instead of being the strength of the world, decided to be the weak link of the world. And now you got Saudi Arabia that's obviously making money hand over fist. You've got the conflict in Ukraine, which should have never happened. And if we had a leader that had any guts, that would never have gotten that far. And China's just sitting back because they're playing chess while Biden is playing checkers. But oil has no business being here. And he keeps looking for the solution. The solution is right in our backyard, Elijah. Shale and fracking, we can get oil back to $35 a barrel, which would then make the ridiculous sanctions on Russia work, because that's what Russia needs to have done, is have their natural gas reduced, because they are the biggest supplier to Germany and to the UK.
Now, when it comes to the rises in commodities that we're seeing, people across the board are talking about food shortages that are coming. What is going to be the effect here in the U.S. of commodity prices rising?
Well, look, I think the U.S. will survive it because we can mostly afford it. Okay, it'll be expensive. Okay, and you'll see probably, a lot less people will be eating steak, they'll eat more pork, and unfortunately it will be chicken, except that poultry has risen dramatically because of the bird flu. But I think in other parts of the world, you will see riots, you will see starvation, because they can't afford it or they can't get it. You have to remember, Russia creates 30%, Russia and Ukraine create 30% of the world's wheat crop. And that's how we make bread. And if you remember Marie Antoinette, let them eat cake. This is exactly what we're looking at right now. And with the high cost, I think there are some farmers that are maybe deciding not to farm. And then we talk about Mother Nature that goes into all of that. And we have not had a good weather pattern. There's been some very bad seasons for a number of grain producers, on the opposite end of the spectrum, the Brazils and others that have had some troubles and growing. And we're just starting now, our planting, and now we're starting, and weather has not been ideal here either. So not only are we going to have dramatically high prices and very high inputs for farmers, but you're going to have probably not as much produced.
Now, there's kind of two different ways of looking at this situation and how people can protect themselves from this inflation. So you have, the people who are looking to protect themselves from the higher prices coming forward, and people who are looking to invest and take advantage of this current situation. So if we take the first situation here, the average person is paying a lot more for gas, for food, for rent, and all of that. So how do they kind of fortify their finances so that they aren't too much hurt by these rising prices?
Well, it's hard to, obviously, you have to watch your budget and you have to watch what you're spending. I mean, from an investing standpoint, you really have to be able to stay invested and survive through these things. I mean, we hedge ourselves, so I'm always protected. I'm always 90 to 95% invested in equities because, again, I've got a protection model that builds protection around it. But if you're not, you just have to make sure that you're budgeting correctly and do not get yourself in a trap of leverage. And then watch your normal home budget because that's why we're going to see some prices will drop, some will rise. I think cattle will probably suffer in this market because it's expensive protein, and I think that's what will force hogs higher. But everything will meet a price. But there's no really way to protect. I mean, you can talk about buying gold and silver as protection. But are you going to spend them for food? I don't think we're at that point yet, but certainly at some point we could be.
Now, as for investing, you say you're largely invested in the stock market. How do you play the stock market then? Because I know since the beginning of the year, we have seen quite a bit of a pullback. So how do you protect yourself against crashes and pullbacks in the stock market?
We use a derivative models, options. We use options that either, like if you have mutual funds, those mutual funds are all benchmarked against one of the major ETFs, like the SPY or the Q or the IWM, which we can hedge directly and correlate it, or stocks that have liquid options can be hedged themselves. And so really what I'm doing is I'm assigning X amount of risk to a portfolio, but at the same time, I am willing to buy more on every dip. So this year, for example, I have bought shares every time we dip down. At one time, we're down about 16 or 17%. Then we rallied all the way back down to be only down 6%. So I bought shares below there, and I rehedged up my basis back up at these levels where we are now. So again, it's a question of control. It's a question of being disciplined enough to manage your portfolio correctly. And if you don't want to hedge, just don't over leverage yourself, because again, the money that you put in the market needs to stay there, because if we go back to time in versus timing, and overall, if you're buying good companies, Apple, whatever, something like that, that's going to be around 20 years from now, you'll be fine. You'll make a lot of money. But if you get trapped up in these waves of swings of markets where, the pundits are, oh my God, the world's coming to an end. Yeah, that's ridiculous. We're not going anywhere. The market has proved in history up 8.5%, and since 1950 up 10% per year.
Now, what is your outlook for the other markets? You mentioned precious metals is one way that people can protect themselves. Your outlook currently for gold, as we're seeing it rally this week?
Yeah, well, full disclosure, right as we speak, I am short gold on paper. All right, I'm short paper gold because we trade that not actively, but we trade it, swing trade it. But I always own physical gold and always buy more physical. I would never own paper gold as a protection. If I wanted it as protection, and it's really protection against the currency, because we both know how criminal the fiat currency market is and what the manipulation that the central banks can do with those dollars. The U.S. dollar is trading at par right now. What does that mean? It doesn't buy any more than it bought last week, buys less. So But I think gold and silver are great investments. I think they'll appreciate. They're great hard assets. And I think they're getting ready to break out. And I think we'll probably getting ready to reverse here. And so I'll be double long. But also, I think that there is an outside chance that we could have a problem that they may need that as a currency to actually eat. Okay. Now, I don't want anybody to get alarmed like I'm sounding the bell, but there's enough problems right now. And these currencies, this fiat system is horrible. Okay. And it's a devaluation or taxation without representation, however you want to put it. And you may, at some point in your life, you may need gold or silver to go shopping with. And it's just something that I think everybody should have a percentage of gold and silver in their portfolio.
No, you mentioned how, like in a worst case scenario, people might need to have gold and silver to eat, meaning that they might have to spend their precious metals, for real food, right? So I know some people, what is your perspective on that? Because I know some people prefer the 90% junk silver, like the old dimes and quarters and half dollars. Is there any form of metals that you prefer for kind of that worst case scenario?
I think junk silver is perfect. I think I'm a big believer in junk silver. You could have a gazillion dollars and buy one big bar of gold, but how are you going to make change if you have to actually ever really need it, right? So I think that the silver in small denominations, because that's what you're going to need at some point. Remember, you have to plan ahead and know that it just isn't buying the metal; it's actually strategically buying it in case that emergency comes. And the other thing is, why should you pay for the artwork that might be on that piece of silver?
That's a good point. Really being strategic about that and thinking about, well, what is going to be the most useful in a worst case scenario, and also making sure maybe not to pay too much of a premium, obviously, for just a particular design there. But your perspective then on silver as well, because we covered gold. You're saying at the moment you're short paper gold. What about for silver?
I'm also short paper silver at the moment, but that is, again, those are both right on the cusp of being reversing out. We trade we swing trade them, and we're either long. I'm either long or short on paper every single day of the year, and we're very close. I think over 26 would be a reversal, anyways. And of course, but overall, in all the metals, I'm very bullish long term. But again, I'm willing to hold them, as a physical tool. Okay. I do love, if you're looking just to play it for a trade, I love AG. It's a silver miner for $13. I think that's a great little play if you're looking for something. But I think that the most important thing people can do is own physical metals, because I think I don't think there's enough physical to cover the amount of paper that's been put out there. Okay. And I think that could be a problem at some point as well.
Now, as a lifelong trader, what does that actually mean? How do you interpret that? Because so many people have said that there's more paper, precious metals out there than the physical metal. What does that actually mean for the average person, if you could kind of put that in layman's terms?
But what that means is that if everybody's holding an ETF or a company or whatever, that there's more paper sold that represents. So I got a better way to explain it. Okay, if you go back in history, they used to make silver certificates. Before they said Federal Reserve notes on $1, they said silver certificates, and you could take that $1 into the bank and get a Morgan silver dollar. Okay. Well, obviously that's changed. We can't do that more because now they go from silver certificates to notes. Okay. I think there's been more notes put out there than there's actually physical supply of the metal. So if everybody wanted to cash in and get physical all at one time, there isn't enough. So you'd have a lot of worthless paper that would not help you if you really needed it.
And that's the reason then to hold the physical metal is who knows if you're actually going to be able to get the physical metal if you're just holding the paper.
Exactly. And the other thing about physical is, again, there's no company behind it. There's nobody behind it. It is simply a piece of it's a hard asset, like your home, like your car, that you put in your safe and you have it. So if you do need it, you've got a place to get it. If not, it'll appreciate in value over time anyways.
And if we do see kind of a run on the market, I know back in the day, there would be run on the banks, right? And the bank wouldn't have enough cash. Is that kind of what you see happening for the precious metal markets, as we could see a run on physical, and then some of these exchanges, well, they don't have enough physical to back the paper that's out there?
I mean, it's certainly possible. I can't. That's a prediction that I don't typically like to make. I could see it happening. It wouldn't surprise me, but I don't see it happening anytime soon. But I do see the values to continue to grow and appreciate as they have. Remember in 1998, I think gold was 200. Now it's 2,000. So, I think it'll appreciate. I don't expect to see a run. There's so much manipulation now with the fiat currency system that they'll do something if they start to sniff a problem. And I think that it's not going. I don't look for those panic type of runs that we remember from the 1920s.
No, when it comes to the precious metals, one that isn't talked about too much is platinum. And I know we touched on platinum our last interview, and you had mentioned how really it seems like it's undervalued at this. It's pretty much the same price range, around $1,000 right now. How is it that low?
And I'm still buying platinum. To me, it's like it's on sale, but it's stuck. Right now, it's a dead metal. Okay. It's got value, it's got industrial value, it's got all kinds of value, but it has no value as far as the market is concerned. What's going to change it? I don't know. I do know, if you watch palladium, similar type of metal, that just went from 2,400 to 3,800 and back to 24. Again, I don't have an answer specifically for that. I tell you that I'm a continued buyer, and I'll buy 2-over-1 platinum over gold. Okay, right now, because I think it's an unbelievable value. And I could be wrong. Maybe it'll go to zero. I don't know. I don't think so. But again, that's the way I'm going to play it, is continue to buy more platinum than gold, because I think there's a better value in it. I think it's got a greater upside.
I really like hearing that when you say it's a dead metal, because it seems like that's the time really to get into a market when nobody's paying attention to it.
I agree. I mean, that's typical in most markets, is when there's nothing to do, then there's finally something to do. And I do think, listen, it made a run, a couple of months ago to about 1,200, and it fell apart once again for the 100th time in the last year or whatever. And look, I think it will overtake the price of gold at some point. But for now, again, it's really lack of interest, and it's also, for trading the paper version of it, there's a lack of liquidity. That's the other issue with that. So it doesn't trade as much as the others, because there's not that many people that want to trade that as a trading vehicle. So in fact, we took it out of our portfolios because we were the market for a while, and we decided that wasn't the right position to be in.
All right. Well, Todd, we really appreciate your time and insights today. Before we let you go, where can our viewers find you? And did you have any last thoughts? BubbaTrading.com
or Bubba@BubbaTrading.com. You can email me direct and just let me know where you got me from. My last minute comments is just, you have to always be defensive with your money. Okay. Defend your capital at any cost. Just remember, if you're a sports fan, defense wins championships. And if you're an investor, defending your capital, which allows you to continue to invest, makes you money. And I think that's all I can really add here, is to make sure that through rough times and good times, always protect yourself, because nobody knows when it's going to end.
Todd, Bubba Horwitz, once again, thank you so much for your time, and God bless.
Thanks, Elijah. Appreciate it.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email.
Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.